Are these monster dividends the future for income investors? You guys asked, here's my answer. Today we are talking about ticker XBTY. We're going to do 10K invested hypothetically, and we're going to calculate all of that based off the first couple of distributions. If you're not familiar with this weekly paying dividend ETF, yes, every single week you get a payment. It is a YieldBoost one by GraniteShares. So I'm really pumped to get into that. The YieldBoost have been doing really well, and you guys have been commenting nonstop about these new weekly ETFs. So we're going to cover all of that and more, including their newest YieldBoost launch, COYY, their Coinbase fund that I am really interested in seeing how it stacks up versus all of the other weekly paying Coinbase funds. Now, we're going to get into this video, but don't forget, if you're interested in ETFs, in income, you are in the right place. Don't forget to like the video and to subscribe so you never miss future content that's telling you what is making income investors the most money in the stock market. Thank you so much. Let's roll that intro. I have covered the YieldBoost ETFs before, but I want to give just a little bit of an update for those that don't know how these work. First of all, there's 6 of them now. There's one on Coinbase, on Nvidia. There's one on QQQ, which is very interesting. TSYY, XBTY, the one we're talking about today is on Bitcoin, and then YSPY, which is on the SPY ETF. Very interesting. People seem to like the single stock ones more based off of just the AUM. NVYY is nearly at 39 million. We have TSYY at 90. And then, of course, XBTY, our topic of the day. Now, I will say this thing launched at about $25, maybe a little bit over, and it's still sitting about in that range. I think it's down about 1%. Now, they're designed to generate income from option strategies linked to the 2x long Bitcoin daily ETF. Now, you're seeing a 2x long Bitcoin daily ETF. You're seeing a lot of leverage. To generate income, XBTY sells put options on leveraged ETFs linked to the 2x long Bitcoin daily ETF. Very interesting. Different strategy than what we've seen in a lot of these. So I'm going to slide down. We're going to go to the fact sheet. We are going to jump into the distribution history in just a moment, but the fact sheet gives us a ton of data. Let me zoom in for you guys. And I always recommend, if you're interested in ETFs like this, from one retail investor to another, look at the website. If you're going to put even 1% of your portfolio into an ETF, research it. And I don't just mean watch YouTube videos on it. I do mean getting into these details, into the documents, and learning to read them for yourselves. It takes time. It's not fun. If someone tells you it's fun, they're lying to you. It's boring. But over time, everything starts to make a little bit more sense. There is always more to learn, unfortunately. So one important factor, the management fees are 0.99%, which is high for a lot of funds, but lower than I would have anticipated for something with this yield. It's very impressive how much money these things are putting out. And so we see the primary investment objective is current income, not growth. If you're hoping to buy this and have it go to $50, that's not the point of the fund, and it's very unlikely based off of the strategy. It could happen, but again, it's not the point. The secondary investment objective is to seek exposure to the performance of one or more exchange-traded funds whose shares trade on U.S. regulated exchange, yada, 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 2 times 200%, the daily percentage change of Bitcoin. So could it go to 50? Yes, it could. Am I thinking it's going to anytime soon? No, I'm not. It would take a lot to push this that high. You'd have to see quite the run in Bitcoin, and it is limited. It's capped on that exposure. Let's talk about exactly why you're watching this video, the distributions. It has paid 8 so far. So we have 2 months of trading roughly. It started trading in May. And the distributions have been a little all over the place, but kind of in a good way. 46 cents all the way up to 62 at the high, down to 61, to 50, to 46 again, 48, 48, 47. So it's been consistent these last couple of weeks, which I like. And then you get also a bonus one where it paid out 18% more. Love to see that. Quick math. It's definitely not accurate, but around there. But I am really interested in this ETF as Bitcoin has just been going nuts. And what I love about the implied volatility with Bitcoin is it's almost always going nuts. So even if we see crazy drops, if we see crazy rises in Bitcoin's price, you will see a little bit of that fluctuation with the ETF itself, but it's only going to make for juicier premiums and thus more money in your pocket every week from the distributions. Now, what I'm going to do, I'm going to run some numbers and we'll calculate the exact yield based off the current price, which since the price is barely shifted since launch, we're going to get a pretty accurate yield. To show how I do this, I like to calculate the yield myself always. They probably have it for display, but I like to run the numbers. I added all the distributions up and divided by 8, which is going to give us our average. So this number I'm then going to take and we're going to look at the current price. We're going to multiply this by 52.2 because that's roughly the number of weeks in a year. And that's going to give us 26.64. We're then going to divide this number by the current price, which is what? 2513.13. And we're going to multiply that by 100. So their yield was correct. They said 100%, and it's at 106. Now, listen to me. These are high-risk income-producing products. They are made to be high-risk and to produce the most income. You are not going to see consistent high yields of 106%. Like this has paid out with only losing 1% in value of the underlying ETF in the NAV. That's amazing. That is amazing. And when I spoke with the CEO, he stressed that is the goal. Now, long-term, would you hold these? I don't know. In a down market, would they get beaten up? It's very likely. So they are definitely high risk, but they serve the purpose of insanely high income. And that is why you guys have been commenting them relentlessly on all my videos, which I do appreciate. Helps me go, oh, you know what? I need to make content on this. People are watching this. People like this. So I do appreciate it. And if you have ETFs you want me to talk about, drop them in the comments, please. So we are going to use this 106% distribution rate. Now, we only have 8 dividends so far, so it is going to be a little bit skewed. But before we jump into that calculation, I want to show you guys the drip calculator because the numbers are pretty wild. I am actually going to play it safe. So the drip calculator is an amazing tool. I use dividendchannel.coms. I have something in the works for creating one, but I have no idea how to do it. So I'm definitely paying someone because, come on. I don't know. It's too difficult. The numbers, I'm not a code guy. Like you might think, oh, this guy's a nerd. He loves finance and blah, blah, blah. I don't do all that deep coding and whatnot. Anyways, back into it, we can see that had you purchased at the inception of the fund with $10,000, you would now have $11,577. Yeah, that's right. In 2 months. That's crazy. It's a near 16% return in 2 months. So you're averaging a little under a little over a 7.5% return per month. That's not bad at all. The annualized gain is just under 74% a year. And so that's what we're going to use because the drip calculator is factoring in that drop in price as well. It's a more definitive calculation, I would say. So I did calculate just the yield, but that's based off of our current price. This is the total return, which is amazing. And would you drip this? People might be asking that in your own brains. I love using drip. It really depends on the market. Like I said earlier, we are in a bright green market. It is beautiful. We log in every day and go, you know what? Let's see how much money I made. That's not always going to be the thing, unfortunately. I do believe long-term markets go up, but you have to factor this market into the returns that we've seen so far. So if we were to see in the next 3 months a crazy bear market, can you expect a 7.5% return every month? Probably not. You're probably going to see some NAV loss. You're going to see things go down, and you might think, oh, it's NAV erosion. If it's not paying out too much, it's not NAV erosion. These do also go up and down with the market. They do get a bad rap with the NAV erosion thing, and there are some that have crazy NAV erosion, but I think XBTY is a very interesting one. And if you don't know, I'm doing a challenge where I buy the top 5 weekly paying dividend ETFs, and I think XBTY might be a good one to go in there. Let me know what you think in the comments. I'll link that video at the end, but don't jump away yet because we have a big calculation to do and you're going to want to see these numbers. Now, I know I'm going to get some comments, so I'm just going to address them right off the bat. I'm going to do 1 year all the way up to 30 years invested. The goal of that is to show the power of drip as well as showcase the power of how this has been returning. Is it going to return this exact amount for 30 years? No. I can almost definitively say it's not going to happen. It's not going to return this well in a bear market. It's not going to return this well in a sideways market. There's a lot of factors weighing in on the performance, but I do want to showcase the amazing performance we have seen with XBTY. So don't come for me in the comments. You can. It's always entertaining to read. But I factored everything in. Our share price, number of shares is just under 400 for that $10,000 invested, starting off with 1 year. Now, I have the dividend yield. This is from the drip calculator, 73.81%. And the distribution frequency is set to buy monthly. Now, they don't have weekly as an option on here, which is unfortunate. It's going to affect the calculation a little bit, but not too much. So let's get into the details. After 1 year, if you had 10K invested into this and you had drip on, remember now you're dripping, twice a month, your ending balance would be $20,600. You've made over 100%. You are returning almost 7% actually, which is outstanding. Your annual dividend income is $14,814. That is amazing. Our total dividend so far is $10,700. So we're going to kick it up to 5 years. And you're not going to believe me because it instantly goes insane. But listen to me. I'm not saying that you are going to turn $10,000 into $380,000 if you hold this for 5 years. I'm saying that's what we've seen in this market with these distributions. It is amazing. So it would be more amazing if it held for 5 years. 100%. Is it going to? It's unlikely. But this is outstanding. So after 5 years, your 10K would be worth 378,000, almost 379,000. Your total dividends would be 367,000, and your annual dividend income now moving forward is 271,000. So you could literally retire. If it stayed at this rate, you could retire after 5 years of holding. You could pull out $200,000 a year and reinvest 72,000, and you'd be sitting pretty. Now, is there a reason that I should go up to 10 years, 20 years, 30 years? No, but we're going to do it anyway. After 10 years, your 10K is worth 14 million. And I'm laughing because it's amazing. But is it going to do this again? You tell me. And I mean, we'll kick it up. We'll do 20. After 20, what are we looking at? We're looking at 20 billion. If you're still worried that 14 billion a year is not going to be enough to live off of, you can hold it for 30. I usually, under normal circumstances, I like to say, let's say you're 25 and you want to retire at 55. Well, you're going to have to pay taxes on it of like what, 30%, if not more. But you're going to have quite a bit of money. Taxes probably aren't going to bother you too much. But let's say it's in a Roth, and let's say you start at 30 and you want to retire at 60 and you're in a Roth, so you can pull your money out tax-free. Boom. You're going to have, what even is this? That's million, billion, trillion. You're going to be a trillionaire. And I think I don't even know what the GDP for the entire earth is. I think that might be more than it. But congratulations. You are now the richest human being to ever have existed, ever. But all in all this fun math to show you that if we did see this continue at a rate of just 1 year, you would be getting 107% out of your investment in 1 year. But again, it's risky because we've only seen 2 months of trading in a very green market. But I want to know what you guys think. And let me know in the comments, would you switch up and be okay with some NAV erosion for higher distributions? How would you work that? I'm curious. I am not a fan of NAV erosion at all. I like my money to make me money in the sense that I like it, the initial money to make money and my dividends to be that income, which is amazing. But I don't like to see my NAV or my initial investment drop steadily. And we've seen that with a lot of the weekly payers. So far, we've been good with XBTY, but again, it's all with this market. If you want to see more content on these YieldBoost ETFs, let me know in the comments down below. And I really appreciate you guys for hanging out with me for this video. If you enjoyed it, you're going to like these popping up on your screen right now, including one of the most popular weekly paying dividend ETFs, ULTY, and how much you'd need to retire on it. It's been doing pretty crazy, so check out that video and my Big 5 weekly paying dividend ETF challenge, where I'm putting 5,000 of my own dollars into this account for you guys for entertainment and hopefully to not lose a ton of money. Thank you guys so much. I hope to see you in the next video. Don't forget to like and subscribe.